today. The performance has exceeded street expectations. Management too guides for double-digit growth. Yash caught up with Siddhartha Mohanty, who is the MD and CEO of the company, to discuss their performance gone by.
Last year, AP was almost flat. And primarily due to product regulation changes, Q3, that has great impact on our business. If you see past 6 months, up to Q2, we were showing very high growth. And we were to surpass our budget. But due to product regulation changes, our field force, they take some time to adjust to new product regulation, and many products were also redesigned, refiled.
Correct.
So that affected our AP growth. AP was just muted, flat. But current year, 26, FY26, we have taken directional change. We have given direction WRP and AP, that will be our target, not a total premium target. And last year, because of product regulation change, most single premium policies, our agents sold maximum single premium policies. So that also affected AP to some extent. But current year, I am very confident what figures show now. You will also observe after 1 quarter. It is in right direction and will show good growth rate in AP.
Okay. WRP as well as AP. Good growth is what you spoke about. What could be that good growth? Could it go back to about mid double digit?
Our objective is to at least achieve double digit growth in a WRP and AP.
Okay. Now coming to the elements of AP as well, retail and annuity in terms of the term book as well as the annuity book. What is the growth that you expect there for FY26? Because those are the two segments which are picking up very fast.
You see, annuity as well as a term, both we see a great uptick. Because annuity today, our annuity rates are most competitive in the market. And term insurance, people prefer LIC term insurance because they are assured of whatever risk we cover, we will definitely fulfill our commitment. So I see good growth rate in both these segments, term as well as annuities.
Okay. Could you quantify? I mean,
it will be difficult, but whatever growth you are seeing, it will further improve.
Okay. I want to speak to you a little about market share also, because market share, both policy-wise as well as premium-wise, has declined in FY25. Policy-wise, the market share declined by more than 4%. Premium-wise, it declined nearly 2%. What is going to be the strategy when it comes to regaining that market share in FY26? Where do you see, what kind of increment do you see yourself making when it comes to the market share front from FY25?
You see, market share is a function of growth. The rate at which small players grow, it will be very difficult for LIC having a large base to grow at that stage. But having said that, we have our internal strategy. Up to a level, we must maintain our market share. We will not go below that level internally. Say for individual assurance, we are now focusing 40%. 2% plus this side, that side, but 40, it should not go below 40. Last time we achieved some 37 point plus, something like that. So that is our strategy. But what we are focusing post-listing, profitable growth. Because after listing, every time I have given commitment to everybody that will show growth, profitable growth, that which we have already demonstrated in all our operations quarter after quarter.
Correct. So, I mean, if one has to understand the market share, both in policy and premium terms, in policies, your market share was 65.83%. In premium terms, it was 57%. Would these be the levels below which you would not want to go?
No, markets are difficult to predict, but this figure will grow. Whatever policies we sold last year, definitely current year we will achieve more policy. Because if you see, because of a change in product regulation, many policies ticket size has gone up.
Correct.
Minimum ticket size.
Correct.
And because many agents are rural agents, they confine only to small ticket size up to 1 lakh policy. But now most of the policies minimum sum assured is 2 lakhs.
Correct.
So that has some impact, but now they have adjusted. Over 1 year, whatever experience we have made, current year that will be visible, so that more number of sale will happen and more premium also will happen.
Okay, so market share from this point is expected to go up. Okay, fair point. In terms of margins, that went up in Q4 to 18.75%. versus 17.2% on a year-on-year basis. FY25 margins, that came in at 17.6% versus 16.8%. You are growing your non-par book. That is a continuous process that you're making. But in FY26, you'll also have the implication of higher surrender value regulations coming in full force. For FY26, where do you see margins going? Do you think it could become the year where your full year margins, FY26 margins, could cross that 20-21% mark?
You see, last year we have already shown AP growth in non-par. Non-par share has gone up 27.69%. So, and also 80 basis point increase in our margin from 16.8, we have gone to 17.6. Current year, as I told, since focus will be on WRP and APE, and I am confident that margin will further improve. It will be difficult to quantify, but definitely at least from 17.6 to 3% uptick will be there.
Okay, so it'll cross about 20%.
Around that is our objective.
Now, let's speak about a couple of regulations. The government proposed the insurance amendment bill, the changes that it wants to see. One of those was to allow individual agents to tie up with more than one life insurance company. Now, for LIC, of course, the biggest, about more than 95% of the total business comes from individual agents. In that case, are you in favor of this particular proposal of allowing agents to tie up with more than one life insurance company, or are you against? And have you, whatever your view is, have you put that to the government?
You see, we have already made our view clear to government.
Which is? And
government will decide because the government is our promoter.
Correct.
And definitely whatever comes, LIC will face any challenge very effectively. We are well prepared. Any regulatory changes so far as open architecture, anything comes, LIC, and I believe my agents are not just agents. They are more than permanent partner with LIC because we give them so many other benefits apart from commission, unlike others. So I have firm belief whatever comes, our agent will be glued to LIC only.
Correct. But for this proposal, are you for it? Are you against
it? We
it?
have made our view very clear because to develop a captive distribution channel, not only for any insurance company, but for any distribution company, it takes a lot of time, energy and cost.
Correct.
Because the captive distribution channel.
Correct.
And suddenly if you allow your channel, distribution channel to work for others, so that definitely poses some challenges. Okay,
understood. One question that I want to ask you, and this is with respect to certain comments which came from the DIPAM secretary as well. An OFS in LIC, that is in the pipeline. He is on record mentioned it. 3.5% is the stake which is in the market right now. Do you think a higher float in the market will help LIC and a better price discovery of the shares of LIC? And second, since he's made that comment on record, have you received any communication with respect to preparing towards an OFS?
You see, this DIPAM will decide. So far as OFS is concerned, they will be deciding on that, and will be at appropriate time, will also be intimated.
Correct. But do you think a higher float will help better price discovery?
Definitely, because there is no float at present. If you see, unless there is a good float, difficult to trade. Because many people have asked me privately, we can enter, but how will exit? There is no such float.
Correct.
So I think that will definitely help.
Okay, so have you put your view to DIPAM saying that we want a higher float?
They will consider. DIPAM is examining from all angles in the best interest of shareholders and LIC.
Okay, all right. So that's the management of LIC. We need to take a short break. But as we do that, there's some exciting news for you all. We're excited to unveil our brand new global business news channel, the all-new CNBC-TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC-TV18 Prime at 12 noon for the Global Reset and Global Lens at 8:30 p.m.